One of the things that we have to check in on is what is going on in the real estate market today, not what people are talking about the future, what they were talking about last year, what is going on today. We do this by talking to a top 1% agent in the Seattle, AKA King County area. So, Beth, I got to ask, you had a bunch of inventory. Some of it was lagging. Rates fell. I'm curious, did the buyers come out of the woodwork? What's going on?
Yeah, so it's been very interesting. We got our new data out in the Seattle King County area, courtesy of the Northwest Multiple Listing Service for September. And it's interesting. It shows the question everybody has is, are we going to have a surge now that the Fed has cut rates? What does that mean? Long story short, there is a bit of a surge, but my question is it our normal seasonal post-summer bump?
Mm.
Or is it something a little more? As we know, rates, they kind of went down before the rate cut, and then now they've gone up, which is really confusing, I think, to a lot of people. I think it may even bring some people off the sidelines who think that they're going to be able to time the market with these
Yeah.
things. Because I have had some people say, why would I buy now if I can just wait and buy at a lower rate later? But the
See how
thing is,
that worked for you. Yeah.
nobody really knows when those rates are going to go down
Yeah.
and
It's
what
really
that's going to
funny.
do to the market when they do go down.
Yeah, I'm really curious because again, I've studied the consumer for 30 years. We obviously live in this echo chamber of real estate and interest rates. We live and breathe it. We understand daily changes, but the
Yeah.
average consumer, they don't have any clue, right?
No,
The
they
average
don't have any clue.
consumer probably heard the Fed rate cut and probably just naturally assume mortgages got cheaper. They don't realize that mortgages are up 60 basis points in like 4 trading days.
You're
So
right. Most people pay
crazy.
no attention to this and they don't understand it. And even more so, I was told years ago by people that really study the market and the consumer, specifically, it was my friends at Zillow that study all this stuff for a living. They said the typical home buyer knows nothing about the process. And
Wow.
now I have to say, our listener here at One Rental at a Time, I would like to think probably a little savvier, but
I would hope
the
so. I would
typical,
hope so.
let's just say yes, they are, very savvy group of folks. And they're studying and they know a lot more than the typical home buyer. But the typical home buyer knows nothing. So I have to, when we're talking to the home buyer, or I'm talking to people who are thinking about buying homes, and I think it goes for sellers too. I think a lot of sellers have no idea how it works either, especially a lot of the first time sellers that I work with. So I just try to use very basic. I don't use the lingo and just try to
Right.
explain things in a way that makes sense to people that don't live and breathe this stuff every day. That they just really don't understand the mechanics of how this works, and that's why they come to me and you and others is to learn about how these things work.
Exactly.
But
So,
people out there here, okay, rates are going down. That means I'm going to get a lower interest rate, but maybe I'll wait for later because maybe
yeah.
they're going to come down more. Hard to say. Or some might be
It's hard to
jumping in
say.
now thinking that they're going to get that rates are improving. But the thing is, they aren't really from a, I don't think it's, if you looked a month ago, this is a question for you. Are rates higher now than they were a month ago or
Yeah.
lower?
No, they're
I
higher.
think they are
They're,
higher. I'm trying to
they're
remember where they were a month ago. I think we were close to like a 6.2 or something maybe a
yeah,
month ago. And now
exactly.
we're
I
a little
think
higher than that.
yeah, we bottomed out at 6.1 right before the Fed rate
Mm-hmm.
hike or rate cut, rate almost said rate hike, rate cut. And now we're over 6.2 and probably going or over 6.62 and probably
Oh,
going higher
yikes.
today based on the 10 year. So
Yikes.
quite a
Yeah.
move. But I'm
Yeah.
curious, we had a rate cut 2 weeks ago, which means if you're an uneducated buyer, you hear that you think rates get down. Did you see a spike in demand? This would be early October. We'll look at September in a minute, but have you seen an
Yeah.
early uptick in, demand in early October?
Yes. So last week, almost all of our listing inventory went pending almost all on the same day last week. Everything just happened all at once. So
Now,
yes, there
just
has
just when
been,
you
this is
say
just
that,
me personally. Yeah.
yeah,
Yeah.
when you say that, you're not running with one piece of inventory. You have a heck of a lot more than one.
No, I think for us it was, I think we had maybe five go pending,
Yeah.
and I I'm not one of those agents that runs hundreds and hundreds of houses. You know, for us, it's a smaller number, higher dollar. It's just kind of how our market works.
Yep.
But yeah, almost everything went pending on this same day, just about. We did see a lot of people jumping into the market. Now, in the greater Seattle area, we do see that August is one of our slowest months. It's the slowest one, right behind December for the whole year. And it's because people are in vacation mode. The weather's been gorgeous. People are out. They're trying to get their last hurrah in before kids go back to school and everything else. And so we definitely saw that happening this year, with August being very slow. And then September, now we did see that more people jumped into the market. Pendings are up about 20% year over year. So
very cool.
Versus,
Well,
versus August, which pendings were only up 3.2% year over year. So we did see a big jump in the pendings, but we're also seeing more actives coming on too. I've been putting on more listing inventory per this month and last month than I have in a long time. So a lot of people that their reasons vary, but we've been putting more listing inventory on, but it's also been going off the market faster than it did.
Yeah, so we've talked about your listings, the last year or so has predominantly been people leaving the area. Is that still probably the most
Yes.
predominant
So
one?
people leaving the area, usually empty nesters, retiring out of the area. That is a good retirement move for a lot of people in high cost of living areas who own a home and have a lot of equity in that home. One of the ways you can benefit from that is to sell here and go somewhere else where we can downsize in a lower cost of living area, or be closer to family elsewhere, et cetera, and take some of that equity to use for your retirement. So I see a lot of that. Some people moving for other reasons too, but that's the typical scenario that I see more often than anything. But we're also seeing a decent amount of estate sales and, family changes, things like that. If someone's getting a divorce or someone passes away, they're going to need to sell regardless. Those are the people who are always going to be selling.
So these are still what I would call need to sell versus want to sell.
Definitely need to sell. Has this interest rate cut or change in psychology brought anyone off the sidelines? I don't think so.
Not yet.
I'm not seeing any of them yet. And the people that are making offers on my listings, what I'm seeing, the stories from them are mostly just kind of what I was talking about. They're people that are moving here from somewhere else. They sold their bigger home, buying their smaller home. We do still see some first-time home buyers, but not that many. I would like to see more of them out there, but it's tough. There's a little more needs to happen before we're going to see that. Maybe a lot more needs to happen before we see them really come off the sidelines. I don't think we're even really close to that.
No, we're not close to that. I think anywhere between where we are today, call it 6.5 and 5.5. It's very minimal. I think we got to go below 5.5. And frankly, I've already told people, I don't think we go below 5.5 in 25. I think 2025 transactions is up from 24, but that's just because 24 is going to be the worst year in, 30 years.
We people in the real estate industry have already been suffering for a while now. The depression you were talking about in transactions, it's real, and people in my industry, we've either learned to adapt or find some supplemental source of income, whatever people need to do, the mortgage industry as well.
Yeah.
Maybe they've got let's look at boom, but then who knows now, but
let's look at September. Let's see some charts.
Yeah. Let's take a look at some charts here. So, all right, I got a couple ways we can do this, but we'll start with this one here. And again, can you see my screen?
I can, thank you.
Okay, so this is courtesy of the Northwest Multiple Listing Service. This is the data that they release, kind of the raw King County data for residential only, not including condos. And so I'm looking mostly at this down here, the new inventory. We can see that it's up, but not a huge amount. 2,100 to 2,500. This is the new. Overall, we're up 28%. So that just means that there's some stale inventory still hanging around out there.
Correct.
That's what that tells me. So, because last year it was 2,500. This year, the total in King County is 3,251. But most of it's new. So most of it is cycling through pretty quickly, but then there's enough that's been kind of hanging around that's bumping this up to 28%.
Yeah. Yeah. Well, you got listings up 28, but you also have pendings up 20. So you are chewing through that
Yeah.
inventory.
So, and
Yeah.
this in August was only a little over 3%, this number
Right.
here. So that's what I'm seeing, where the post summer, whatever psychology shift, whatever's going on right now, where people are jumping in, that's giving us the higher pendings. So we're seeing fewer listings languishing on the market. I saw a lot of that over the summer, where there was a lot of houses that were good and they didn't necessarily seem like they were priced wrong, but they were just not selling.
Right.
Ripe for a good old disrespectful offer, right?
Yeah.
No.
Exactly.
They're still out there, folks. Don't be discouraged. You just
Yep.
have to look every day and be diligent on that. So, and get to know people's situations. So I have had people reach out to me, buyer agents or even buyers, just reach out and say, hey, what's the situation here, and kind of outline
Right.
their situation. And sometimes it'll work, if somebody's particularly motivated, even if it is a new listing, every once in a while, somebody might, usually not, but once in a while. So closed sales up 4.5%, kind of a meh,
Yeah.
you
Yeah.
know. And then the median, we've got it was an even 900 last year, and then this year it's 950. I want to note this is down from our peak in June of 1 million.
Yep.
So million was our previous peak back before all the interest rates spiked in
Right.
mid 2022. In our area, June is typically the month where we see the spike, the top. And that's because
Okay.
you've got, whatever the run up of the bidding wars in the spring, et cetera, kind of reaches its peak in June, and then it drops off over the summer, where you don't see the bidding wars as much anymore, and you start to see some more price cuts. So that's where we are here. We're down from our peak, but that's normal seasonality. When we look at the charts from year to year, you see it does that always around this time of year. Our months of inventory is creeping up. You might recall some of these earlier ones were less than 2 months, where it was maybe about 1.5 months, and now we're at 2.25. Does that make it a buyer's market? No, but I wouldn't say it's a raging seller's market either. Not like we're used to seeing around here, where it's just a battle to the death on
Right.
on a listing. I did have 2 last week that had 5 offers on them. So I mean, there are still some of those happening, but
Still
5
multiple offers.
is good. And these were very appealing listings that had that it factor. But that's not common in most cases. You might have a little bit of competition on a good new listing that's priced well. Now, I'm just speaking about my particular area. Even in my area, you go a little bit beyond where I am on my little part of the east side, there's going to be different stories going on all over. And I've heard some people say it's dead at our open houses, people down south, and some people in the Bill core are saying it's still bananas here, So point here being, get to know your market and get to know folks who are really savvy right with your buy box, so you can get the latest for exactly what you're looking for, because it's going to vary a lot. Even within my area, even in these little areas, each line here, there's going to be a lot of variables within that. There's going to be starter homes, move up homes, luxury homes, even within each of these tiers. So
Yeah.
point being that you really got to look daily to see the anomalies or change shifts in anything that's happening in your specific buy box.
Yeah. Is it fair to say that you're seeing more activity below the median than above?
Yes. However, that middle tier, upper middle tier is doing really well.
So that would be,
So
call it 1 million to 1.5 million, something like that.
I'm seeing it doing pretty well, even 1.5 to 2 million.
Wow. Okay.
And that's a little different than it used to be. So people with more money to spend are spending at that price tier, but those houses have to have the wow factor. It has to have view or acreage or both or something. Those are the things in my area. So
What would you say is the slowest part of the market? Like 3 million and above?
definitely. So there's a ceiling in my neck of the woods. It's around 3 million. And once you even go over 2.5, it seems like it's just very, very slow at that price point.
Okay.
or a particularly large home, like say, for example, a $3 million home. It's like, I don't know, 9,000 square feet, 9,000 square feet can
Yeah.
sit, even if it's the most spectacular home that we've
Okay.
seen, because our
Yeah.
typical buyers
The
exactly
buyer
don't
pool is,
want to
yeah,
buy, even if they can buy, they don't want 9,000 square feet. That's a lot to heat, furnish, insure,
that's a
property
big house.
taxes. Very few
Yeah.
people, even with a big family, need that much space. So, I mean, I would say that
Several
those
families,
ones,
several
yeah.
families.
And sometimes that's who buys them, somebody who's got a combined family or something,
Yeah.
but it's a very, very specific buyer pool. So I'm seeing like that 2 million price point move pretty well, as long as it has the wow factor,
How about
meaning a little
condos,
bit of
like
land.
condos and townhomes? We don't talk about that a
Condos
lot.
a little slower. Yeah, I didn't pull this data up here today,
It's
but
okay.
condos have been a little slower, still moving okay, but we're seeing that those are taking longer on the market.
What's a typical condo size? Are we talking like, I don't know, 1,200 square feet roughly?
No, they tend to be a little smaller than that typically.
Oh,
Well, there's
really?
two
Okay.
types of condos in our area. There's like the townhomes with a shared wall, which those will be bigger. Those might be
Right.
12 to maybe larger.
Okay.
And then, but if you have like a 2 bedroom, 1 bath, maybe not new condo, those are maybe around 400 to 600 or so. And then there's some new construction condos. We don't have a lot of new construction in our area, but we do have some new construction condos that are going for
Got
around
it.
the mid fives or so. And those are
And those are
around,
going to be like 700 square feet.
yeah, they're smaller square footage, but they're new and they've got all the bells
Yeah.
and whistles.
I like it.
So
I like it.
yeah.
Well, at the end of the day, folks, it is once again, know your buy box, look at it every day, see what's going on, learn the stories. Beth, if somebody wanted to get a referral to a top 1% agent, or heck is looking to buy in King County, how would they reach out to you?
Yeah, people can reach out to me through my website, bethtraversogroup.com. And I love connecting with people from the One Rental at a Time community. So I look forward to hearing from
Yep.
folks.
And she's a part of school, folks. If you want to just
Yep,
reach out to her there, she is there as well. Beth, you're
happy to
amazing.
do it.
Thanks for doing this.
Thank you.
Bye.